7.20 to the US dollar this morning. There was talk about some kind of intervention by the Reserve Bank yesterday after we hit 7.16 to the US dollar, and that of course being after that interest rate cuts and in the context of a rising euro and the fact that we did see a stronger start in the US. So a combination of factors pushing the rand stronger.
Hi, good morning, Eleni. Yes, you're right. It was a combination of factors yesterday. We had US markets opening stronger and jobless claims data, initial jobless claims data coming in much better than expected. Then on top of that, the MPC left rates on hold as widely expected yesterday. And we saw the rand strengthen quite considerably on the back of that decision. And we think that that's a combination of the fact that because the repo rate was only cut by 50 basis points, South Africa's yield differential still remains intact, or it remains attractive to investors. We also think that the rate cut has boosted South Africa's growth prospects, and that should stimulate some flows into the equity market.
Where to from here for the rand? At this point, because we obviously down 50 basis points on that interest rate. Room to move again, some would say. Some argue that we won't be seeing a room to move, but fundamental factors pushing the rand stronger seem to still be on the top of foreign investors' minds. Do you think we could see a little bit of weakness coming through, perhaps if the Reserve Bank accumulates more reserves, or do you think we're just going to be seeing a stronger rand from here onwards?
Eleni, we still think that the rand actually has a weakening bias. I mean, the Reserve Bank has been aggressively accumulating dollars, but bond inflows into the market have been keeping the rand quite strong. So on balance, we think that, looking forward, the rand is more likely to weaken from this point than actually strengthen. We've seen repeated breaks sort of below the 720 level recently, but they haven't been sustained, and so we don't think that further rand strength is actually on the cards.
Touching on China's export and import numbers, we saw exports coming down slightly, down 1.4% month on month from July to August, and just looking at the import number rising 30.2%, and that is an increase of 3% month on month. So we're starting to see consumption increasing there. How is that going to affect the local currency, given the fact that we're starting to see a lot more optimism today, and we also saw the yen coming off that key 15-year high against the US dollar, of course revised second quarter GDP data being quite a nice push upwards?
Well, Eleni, as you said, the trade data in China did reflect quite a big uptick in exports. And what happened is that the trade balance actually declined. The trade surplus declined quite substantially in August when compared to July. So though it remained above 20 billion, we think that this is just further evidence of an expected moderation in growth in China. And down the line, this could actually lead to some heightened risk aversion. So markets are up at the moment because 20 billion is still quite a substantial surplus. But we think that there's some risks ahead as far as Chinese growth is concerned, and that could weigh on the rand in the months ahead.
And Nomvuyo, also just looking at retail sales set to be released in South Africa next week. We are in positive territory. We're starting to see a recovery coming through, but not nearly as high as what we saw during the boom years. And I think we saw in 2007 an increase of retail sales for one of the months around 15%. So very far away from those levels. We did see an interest rate cut. What kind of impact do you think those numbers are going to have on the rand next week? Because you're talking about a weakening bias as well.
Well, Eleni, we're not expecting fireworks from next week's retail sales data. Although the Reserve Bank did cut rates, it's obviously not going to be reflected in next week's data. And consumers still remain under quite a bit of pressure. I mean, locally, job losses continue, economic growth is slowing, and household finances are still under pressure. So we don't think that the retail sales are going to give rand bulls any reason for optimism.